ladies and gentlemen. I'm Richard Edelman. I'd like to introduce my co-panelists at this morning's discussion on rebuilding trust in business leaders. So first to my left is Eckhard, who's chairman of the management board and CEO of Metro Group in Germany. Tim Flynn, who's chairman of KPMG. John Monks, who's general secretary of the European Trade Union Confederation based in Brussels. Ferit, who's chairman of the Dogus Group in Turkey. And Ruben Vardanian, who's chairman and CEO of the Troika Dialog group. I'm going to try and frame this discussion for a few minutes. Trust in business was very badly affected by the events of 18 months ago. In fact, trust and confidence in business really plunged, particularly in the United States, which has always been the bellwether for capitalism. It did not suffer so much, by the way, in the BRIC nations. The trust in government, interestingly, went down as well. So it's important to remember that trust in business is higher than trust in government in all but 3 markets of the 22 that we surveyed. Now, let's go to some specifics about the nature of trust in industries. The most trusted sector is technology, 80+% across the world. The least trusted now is banks. They've gone from the third most to the least, from 68% in the U.S. in 2008 to 28% in 2010. That's a pretty dramatic fall from grace. It's also important to look at the fragility of trust in business. While it's stabilized, it's very fragile. 75% say that they expect a business to go back to business as usual as soon as the recession is over. 75% also say they expect that government will be very involved in the financial sector on a go-forward basis. These are not exactly signs of great confidence in business's ability to manage itself. The aspect of CEO trust, it improved slightly this year, but when you think that in Western Europe and in the United States, CEOs are the least credible spokesperson about a company, it's a fairly shocking development. Half as much as an academic, half as much as a financial analyst, half as much as an NGO representative. Down there with a average employee. Not a great endorsement. The values that build corporate reputation have changed fundamentally in the past 4 years. What we see today is that people want a company they can trust and a transparent operation in addition to high-quality products and services. At the very bottom of the list are excellent numbers and a strong leader. So the values imply a change in what companies aim for. So today, what we hope to discuss is, are we moving to a stakeholder society away from a shareholder society? What is the proper role for the chief executive? To what extent ought one to partner with NGOs? So let's just turn first to Mr. Cordes. Let's go through, in your mind, how you see the role of the CEO. Are you a statesman? Are you a strategist? Are you more or less visible?
Richard, thank you. I mean, first of all, let me point out that, in my view, without trust or without a sufficient degree of trust, a market economy cannot work, cannot function. Trust in an economy and in a company, in an enterprise, trust reduces, or a sufficient level of trust, reduces the level of complexity we have to deal with. So creating or having a sufficient level of trust, in my view, is of paramount importance for an efficient market economy and for an efficient enterprise. Number one. Number two, coming back directly to your question, Richard, well, you said statesman. I think a CEO should not be a statesman. A statesman should be a statesman, and a CEO should be a CEO. What do I mean by this? One of the questions I think we've got to understand is, why has come trust down so much? You mentioned CEO is a group now basically at the bottom of trust level. In my view, one of the reasons is that what has happened in 2008 and say first half of 2009 is something that people just don't understand. If I may call it, excuse me, the man in the street, reading newspapers and magazines, reading articles sort of finger pointing at CEOs or politicians or bankers. The normal man in the street does not understand the degree of complexity what's going on here. Or in other words, there's a lack of transparency. People just don't know what it is. If that were so, and I think it is so, and now turning to the role of the CEO, I think what we've got to do is this. We've got to explain to our fellows in our companies what are our targets, what is our strategy, what are we going to do, what do we want to achieve. So be as explicit in that regard as you can be as transparent as you can be. Or in other words, what I want my employees to see and to feel, if A happens, they should know. If A happens, Eckhard is going to do A. If B happens, Eckhard is going to do B and C and C. So what I said, let me repeat, create transparency in the company, do exactly, let people know what we want to achieve, and then, I mean, you know it's a good English expression, you've got to walk the talk. You've got to be consistent, you know, no zigzag course, and I mean, if you stick to those rules, in my view, then I think trust levels will come up again. And a final short remark, and I know we are going to deal with it later on. You know, the CEO, in conjunction with his chairman, should make sure that we, as I said, we come back to that. We should help create compensation systems that are perceived by our employees as okay, or in other words, if profits go up, you get more money. If there is no profit, you get no money.
Well, it's a perfect segue to John Monk's on the compensation issue. Yesterday, President Sarkozy called for a moral capitalism, which, as an American, I couldn't quite understand, but it was interesting. John, how do you find the issue of compensation? You represent unions across the continent.
Yeah, I just wish we did as well for the ordinary workers as unions as CEOs have done for themselves over the last 30 years. Because the share of wages and salaries in GDP in most countries is going down, the share of profits is going up, CEO and senior executive pay is linked very much to the movements in profits. And I think it was for 30 years the average American worker didn't get a real pay increase at all. The prosperity came through the ability to borrow. With all the problems we've seen in the housing market in the United States over the last few years. So, I mean, I think this is, I'm not going to use too many emotional words, but the gap between rich and poor, the top of the company and the bottom of the company, the shop floor and the boardroom, has been widening, and at an accelerating rate. And by the way, that can happen whether or not profits are going up. It can happen because you're not doing very well and you're looking around for some star to come in and transform the business and so on. So you pay way over the odds for somebody to come in. And I know enough about companies to know just how much time many of the boards of directors are spending talking about their own remuneration and the remuneration of the senior grades, and very little time, in some cases, about what's happening elsewhere in the business. Now, there are exceptions. I'm not taking a brush and painting everybody black, but the sense that the system has been rigged, it's been captured by the financial services world, transmitted into values in the real economy, as I call it. And we've got a system that seems to me to be where the rest of the economy serves the financial services world rather than the banks and the others serve the real economy. And the pay system seems to me to be at the heart of that. And one thing I did like about President Sarkozy a few months ago, he didn't know what to do about bank regulation necessarily, but he did say to the French bankers, no bonuses that are excessive this time. And that's the message that others are now giving, and it's long overdue.
So, Tim Flynn, we are in a time when there's a question about how to change corporate values, stakeholder, shareholder model, short-term performance versus long-term performance. How do you get sufficient levels of transparency into the business as well?
Richard, thank you, and I'm sure we'll have a chance to come back and have a dialogue about all these questions and some interaction as we go along. Look, people are angry, and it's understandable that people are angry with what's happened. The system has let a lot of people down over the last 18 months. If you look at, there's 34 million more people unemployed since 2007. 34 million people around the world have lost their jobs coming out of this crisis. Unemployment at the youth, 15 to 20-year-olds, is over 20% in most developed countries. Deficits are looming and increasing dramatically. And so there's no question in my mind that there has been a lack of confidence and trust in the system. And it's at the very heart of the matter if we're going to have a sustainable long-term recovery and address some of the issues that John talked about and what's the right balance as you look across the entire system. And I think that from my perspective, I have a hard time separating the real economy from the banking world. I mean, we don't have a real economy if we don't have financial operating markets that operate properly and function properly. So it's hard to say we have a real economy over here and this other economy over here. They are very, very strongly connected. And it's critical for long-term sustainable growth we have a properly functioning long-term sustainable financial system. So let me move to a second about values and what's happening around the world. As I talk to our people and think about what really happened, how did we get it so wrong in many cases across the entire system? How did some what was seemingly really good people get so far across the line in the decision-making that they made? And I think it starts with all of us to make sure that as leaders of organizations that our decisions are grounded in the right values and the right principles, that we create cultures in our organizations that understand what we stand for, that you go beyond just the letter of the law and you have a set of principles which you measure your actions against and what you want to stand for, that you have the right incentives in place to drive the right behaviors in your organization. And just one final point. As I talk to our people and talk about when you're faced with a really tough decision, how do you go through that process? How do you make sure you're making the right decision? And I said there's three things you have to really watch out for. And I think these three things happen in the system across over the last number of years. Number one, don't rationalize your decision. I'm going to do this just once for the benefit of the employees. I'm going to make this decision just one time to get by this quarter, and I'll never do it again. It's not for my bonus. It's to save jobs. So you rationalize your process. Or implied permission. Other people know we're doing this. My boss knows I'm doing this. My boss knows me, knows my family. If it wasn't right, he or she would tell me. And what you do there is you take your value system and supplant it with somebody else's value system. And thirdly, fear. It's not my job to raise my hand. The culture won't support me if I raise my hand. And I think if we create organizations where tough decisions are not rationalized, that they're not looking for implied permission from someone other to make a decision, and they're not guided by fear, we'll make a lot better decisions. And we will have to realize in organizations, it's not just about shareholder return anymore. That's not the focus. It's stakeholder return. We have to look across the entire system and not just focus on short-term profits, but long-term stakeholder value. And I think that's critically important, and that is part of restoring trust and confidence as we go forward.
Ferit, you're involved in the banking sector. This is the sector that's been most adversely affected by the events of the last 2 years in terms of trust. Compensation perhaps is at the core of this. How are you addressing it in your institution, and what are your views about banker pay in general?
Well, first of all, as a banker, I'm very proud to be here. The last 2 years, we are getting a lot of bashing, but let me tell you, there are bankers who have been doing banking in the world. There are commercial bankers who are trying to be investment bankers. So we have to separate bankers who do products, leverage products, and people like us who do real banking. There are differences. For example, 2001 in Turkey, we had very deep crisis. Similar things happened in our country. The regulation took place. The regulatory bodies did disciplinary action. Very simply, we compensate our people from core earnings, not from treasury products, not from
what I call unsustainable earnings, the real hardcore banking earnings. I think this is very important. So, as the chairman of the bank, my CEO and the people underneath him know that with the right, ethical, transparent, sustainable banking that they do, they get a compensation. So they don't have to go crazy leveraging the balance sheets, creating leverage entities outside balance sheets. This is, I think, very important. And on our board, everybody knows banking. So before even all these compensations, we have to say that chairman and CEO, if it's the same, I think there's a problem. In our institution, chairman is separate, CEO is separate. So there is a governing eye beyond anything. And the boards do this. Now there is a financial crisis. Automatically, the eye is on the bankers. Yes, the bankers have done a lot of mistakes. I think we have to say there was a lot of mistakes done. But I think it's time to stop the shame and the blame. There are a lot of people unemployed in the world, and we should start getting with it. Market economy can be attained or continued by confidence. And I think in this, media has a lot to do as well. I think it's about time that we should take the focus out of the bankers as well. Because we need bankers and we need the customers as well. In our company, I always say this, listen, we are going to go through this crisis with our customers. We're going to help them as well. And we're going to go through this crisis with our people working in our company. Now, beyond compensation, let's concentrate on the real economy, what's happening in the world. I think if you look at these as well, we will get to the right point and we will be able to rethink, rebuild, and redesign the world in front of us. We should stop blaming.
Mr. Vardanian, can we go through your view of the role of corporate governance in these issues? You're a chairman, you have a chief executive, and tell us also from your academic point of view how you see the way forward.
Thank you, Richard. Yes, I'm the chairman and CEO simultaneously, and it's exactly wrong model it was described, and I'm head of corporate governance committee in Russian Industrial Union. But I want to describe a little bit about my company because I think it's very important to understand what's going on worldwide. It's much more complicated. It's not like black and white. We have a partnership with 130 partners. The company was established 20 years ago with $35,000 and 4 people. Now we have around $1 billion capital, and we have a partner, Standard Bank, owned 35%, and others belong to the partners. And I'm the CEO and chairman. The last 3 years, I was not paid any bonuses because my evaluation was done by my colleagues, and the process was established many, many years ago. Top people was not paid, and we pay bonuses in spite of the losses to the employees. And we not deferred, and we pay people big numbers. The reason why I bring this example, I just want to say, it's we're trying to simplify everything, putting it in one box and saying this is right, this is wrong. I think a lot of things depends on the culture, values, and system, and I agree it needs to be very clear what is the goal, what is the system of the compensation motivation, what is the model of the communication, what is the type of the things you want to build in your own company. For example, in our company, we measure the trust every year in our review about saying, do you trust the top managers or not? In online regime, employees answering this question. And we had slowly declined last 2 years, but we don't trust to the top managers, and not because we did something wrong, but because the other point I want to bring now to our discussion is about the competence. I think the crisis that was showing us, I think it was creating a big issue about not only what I'm trust is emotional, do I like or person don't like, but is this person competent to manage the company, competent to manage the country, competent to manage the asset that he got under control. And I'm the president of business school, which was established 4 years ago with 18 founding members, Russian and non-Russians. We put $500 million. It's a big ambition project we tried to build in Moscow, top international business school. And during those 4 years, I visited around 45 business schools worldwide. I was visiting basically all the schools. And I remember my surprise when I went to one of the named emerging market countries, and I was a top 2 schools, which is very well recognized. And I asked the same question to deans of the school, saying, are you discussing with your students about corruption in your country? I said, no, it's illegal. I say, I understand it's illegal, but you have in your country, the graduate of the student, as soon as he will get MBA, will go in a reality and face the corruption. I said, no, we cannot just touch this point. Okay, I say, to touch any about black economy or government involvement in the economy? I said, no. It's again, it's a very delicate issue. I went to the American business school. I said, okay, you're teaching about to do business in China. Are you teaching about how the Communist Party in China making decision and influence the decision-making process in China? I said, no, it's too ideological. Again, I think we are facing the issue about the educational crisis and the crisis of the reality in the world. It's become very complex, very different, and people and the system are not adjusted yet to this reality. And I think it's a serious crisis, much deeper and much serious, because it's an issue about how we'll handle a situation where in Russia, we don't have big banks. We have small banks and not enough capitalized. Okay, our problem is different compared to the US. And you cannot say, oh, let's cut the big banks to small banks, because we have 1,200 banks that's not enough capital, $250 billion. And the banking system doesn't work in Russia. On the other hand, regulations, for example. In Russia, the government own 80% of the economy or control economy or the influence the economy in some way. It's the question of can government really competitive manage or that's another question about regulations. But I will say the world tried to discuss some of the issues which is very important, very serious, including in the trust, trying to simplify some of the elements and trying to put in the boxes black and white. And I will believe in the end, I think it will also go into personal values and the personal issues, which is people need to answer themselves what I'm doing, why I'm doing, for what was my main drivers. And I'm very proud that, again, we have a partnership with my people that I worked for 20 years, and I believe it's a very good model for my company. Maybe it will not work for other companies.
So let me ask a question of the group. Anyone can grab it. So the sort of social contract between business and government changed pretty profoundly in September 2008. Business had been separate. Government had been the referee. All of a sudden, business had to turn to government as the investor of the last resort. And so I wonder, one, whether and how business can get government extricated. Two, are there justifiable demands that government is placing on business now, because it is an investor, cum referee, cum regulator, cum partner, keep going. So any of you?
Maybe I wanted to start. This is a German perspective, and the German perspective might differ from other countries. In our view, there was obviously no doubt that toward the end of 2008, there was a necessity, a must, that government interfered. All of us know without government interference, the banking system would have collapsed. Okay, ticked off, done. The risk I see now is, looking back 2009, what has happened, that, and this is, again, German perspective, maybe some of you are familiar with the General Motors German case called Opel, that a company that was literally bankrupt, Opel, the German arm or the European arm of General Motors, it was bankrupt, let's put it that way. And rather than letting it go belly up and have a sort of a renewal in the German European automotive industry, the government tried to interfere, and the German government tried to interfere. And as we all know, at the very end of the day, they failed with their interference because there was a private solution. At the end of the day, GM stepped in again. Why am I mentioning this? Because the risk from a German perspective, I see is that after the successful intervention in 2008, there was a tendency that German politicians seemed to believe that they could sort of outsmart business leaders in terms of we know how it works. In that respect, they forgot that they at least, and I'm not complaining, at least indirectly involved also in the failure of some German banks in 2008. We have a very special system of some banks in Germany, which you don't have in other countries. So my message is, what we need to do now is this. First of all, yes, it's appreciated that government step in when, the house is burning, end of 2008, in the wake of Lehman. Number two, governments must understand that they are not smarter businessmen than businessmen. So number three, and this is the conclusion, my view is that sort of governments, what you just said, Richard, they should sort of set the rules, and they should make or must make sure, you know, that we as business leaders stick to these rules. That's their role. They set the rules, we play. In my view, everything else ultimately will fail.
So, but how do we do the divorce proceedings? In other words, there's a pretty activist state hand in France, in the United States now, in the car business. How are the assets going to be distributed? John and then Tim.
You won't do the divorce, and at least in the foreseeable future. Let's be clear, the phase we're in now, in a sense, we've rescued the banks, but the cry is, what about us, from car workers? I mean, one of my colleagues can't come here today because of Opel closing the plant in Antwerp. So it's people are now looking around saying, well, you did it for AIG and you did it for all the others. What about us? We're voters. There's more of us than there are of those. And why just that? Why does the welfare state and socialism just work for them and not work for us? And that's the demands that governments are going to be under, at the same time as they're under huge pressure to start paying off the debt, which the rescue of the financial services sector has entailed. And this next year is going to be miserable in many, many countries as governments have to either raise taxes, cut public spending, or probably both. And who pays will be the political debate in the next phase. And I do think that to think that somehow we can get government off our back in those circumstances, when this particular recession has been caused, I think President Lula said, by the guys with blue eyes, Wall Street, London, Zurich, and a few other places, it seems to me that the governments are stuck. They may not want to be there. Their ideology, after all, was to stand back, let business-friendly policies, let the markets rip, privatize, deregulate, all those things, whether they were centre-left governments or they were centre-right governments. But that ideology is now being pressed by the reality of the politics in the street. And with unemployment 10% in average in the EU area, in the United States and so on, the pressures are going to be there. So if you think, anybody in the audience thinks that there's some, right, okay, there's some green shoots of recovery around, we'll get them out and we can get on with it, and we know better than they do, having perpetrated an almost perfect storm, which has, I think, damaged the credibility of the system. And the discussion needs to be in business circles about the system. I wish it was true that we're on a multi-stakeholder course of company responsibilities. You try telling that to the hedge funds. Or some investor I met in London about 3 weeks ago, he said, yeah, I've got long-term investments. He said, there's short-term investments that went wrong, and I can't get rid of them. But, I mean, that is I don't believe that there's some change in the way, there are exceptions, but in the way the short-termist perspectives that have been dominant for the last 30 years or so and remain dominant and led us to a large extent into the current mess.
Well, maybe I'll have a slight rebuttal to that.
Have a go.
I respect your point of view, John, but I think, you know, we can't paint the entire system and everybody in the system by examples of a hedge fund, long-term, short-term. Every business person I talk to today understands the severity of what's happened and is helping to shape the debate to find solutions so we can make sure the system comes out stronger and what happened never happens again. You can't have 34 million people lose their jobs and all things have taken place around the world and not have people understand that every player in the system, I don't you take any exception, had some role in what's taken place and has a responsibility to participate in a straightforward, honest debate of how do we move forward and make sure we put the safeguards in place. The capital market system, there was this illusion that it would self-regulate itself and it would never get to the tipping point. It would self-correct before it got too far. It's pretty clear that was not the case when the liquidity crisis hit in the fall of 2008. Everything froze up and the system couldn't function. And had government not stepped in, we would have had a collapse of the system. I agree with you there's a very difficult issue that we save the banks, and what about all these other companies? And that's a very difficult issue to work through. And I think it goes to the heart of one of the critical issues we have to face, is how do we make sure systemic risk, that no institution is too big to fail? And how do we put the best minds together to figure out how to create a capital market system where no institution is too big to fail? And there's a process and a system to unwind those, because failures have to happen, or you get the issue you talked about now, just who's in line as you line up and line up. So I do think business gets it. I do think government has a critical role to play. I think everybody, and I do believe that businesses are looking beyond the short term, beyond a quick return on profits, to long-term sustainability, and are opening up the debate with all the stakeholders. And I am confident the companies that I see and the organizations that are out there, that is everybody's goal, to try and make that happen. Will we be perfect about it? No. Are there going to be exceptions? Absolutely. But the vast majority of people that I deal with are on that path, and I think it's a great path for us to be on as countries and as a global, interconnected economic environment.
So, Ruben, you're in a very interesting country on this business-government issue. The government of Russia has, been very activist, let's put it this way. How do you manage your relations with government? And if the government says, well, this is the policy, how much pushback can you do, actually?
I think, first of all, we need to realize it's not the government, it's like body, it's individuals in the different ministers and the central bank fight against each other, and you're getting always the problem is not only with the government, it's like one person who making decision, at least you can come an agreement and you can understand the rules of the game, whereas the government has a different agenda and different ministers, you can get an absolutely different, much more complex picture. In Russia, we went from the full control Soviet Union system to no control in the 90s, whereas the government basically has no power and everybody was doing whatever we wanted, depends on the greed or the level of the risk-taking or some other limitation they put themselves, to the system now going back with the government definitely becoming the bigger player, investors, regulator, infrastructure owner. And I think the main point is again about what is the people's agenda in the mind when we're doing any decisions and how they see this all. I want to go back about the government-business relations to your point about America, because I think it's a better example for all of us. Because in Russia, it's the government inefficient, but the business also inefficient. We are in a new stage of development. You're saying that before the crisis, business was doing whatever it wanted, and government was not. I disagree with you. I will say, if you look before the crisis, what Donaldson tried to do in the Securities Commission in America, you can see what he tried to touch some of the weak points. He got big resistance. He got immediately a reaction from the Wall Street saying, oh, no, don't touch it. It's all everything is working, don't touch it. And I will say some way indirectly, government created this crisis also because they saw some of the problems. They had a chance to influence these problems, and they didn't make it because, again, of the lobbying issues, because of they don't want to touch the system. But again, GM problems, it was problem 20 years already. Okay, GM is not the problem with this crisis. The crisis with GM going in the last 30 years, what happened in the automobile industry, and government involvement was always very heavy. But I will say, when we discuss about this whole liquidity crisis, I think it comes before what kind of the relations business the government in general needs to have, what kind of transparency and how the government can influence or not to some decision which was made in the business side. And in the best example, U.S. is not working efficiently anyway. Which is why government roles is not only to be safe haven and save the last moment to provide an example of it, but also the question, what kind of the system of the regulations and what kind of transparency can really build, and how the Securities Commission, for example, and the central bank conflict will finally be solved. Because we all know about this conflict. In Russia or in the U.S., it was clear what they say. Everybody become commercial bank because it's a commercial bank and it was providing liquidity. If you're not a commercial bank, you didn't get any liquidity. Okay, it was clear conflict with the different government bodies. In Russia, for example, it was clear. If you're not a bank, you don't survive. I will say it's a very important discussion about reorganization, also government involved in the business and what kind of the mechanism needs to be done, which is not easy to question.
So let me change the subject slightly. Civil society, NGOs, 75% of those we surveyed said that they would trust business more if it partnered with NGOs on matters of health or other global human rights, etc. So how does business successfully partner with NGOs to build trust back in the private sector? Eckhard, do you want to start with that?
Yeah, I'm more than happy to do that. I mean, one word was missing so far, unless I haven't paid attention this morning. This is ethical behavior. I mean, let me just give me just 1 minute talking about our company. What we just recently did, and basically 8 weeks ago, we embarked on a partnership, even signed a contract with UNIDO. UNIDO is a UN, United Nations organization, dealing with developing companies, trying to sort of educate farmers to do better business and stuff like that. I mean, our company, what we typically do with our, what we call the cash and carry arm, this is basically 50% of our company, we penetrate emerging and developing markets at a very early stage. So most recent example, last year we opened the first store in Kazakhstan, or we are in Pakistan, and things like that. Obviously also in mature markets. But I mean, starting a business, a retailing business, wholesaling business in those countries very much puts us in a position that we need to sort of train our suppliers, because they are not familiar with sort of establishing a supply chain, a cool chain, which makes sure that, you know, their products get to our shelves with a high degree of quality. A couple of years ago, some years ago, in India, 40% of products coming from a farm into our shelves, you know, could not be used anymore because quality had dropped. 40. A huge inefficiency. So what we decided to do is, okay, we said, okay, in order to improve our business, we said, okay, we're going to train these guys, which helps them and which helps us. And that's, you know, in my view, ethical behavior, sustainable behavior does not mean it's good for society and it's not good for the enterprise. The ideal, in my view, ideal ethical behavior is, sustainable behavior is that both profit. In that case, I'm just talking about the suppliers and the company. And what you said, Richard, in my view, is also clear. I mean, that is something which deserves to be talked about, and it might also help, to reestablish trust. But to avoid any misunderstanding, we have not created or embarked on those steps just because of the crisis. It's part of our business, and as it is part of our business, we are at the same time sort of helping develop those emerging economies.
So I'm going to ask one more question of the panel, and then I'm going to turn it out to the audience. So Ferit, the media. The media has been pretty tough on business for the last 18, 24 months. There are some in the business media who even criticize themselves for saying, you know, we should have seen this coming. We should have been tougher on business. How do you interact with reporters? How much do you rely on them to tell your story?
Well, if you are sure about your story, you have to be direct and to the point. I think partial reason for this crisis is that we hid a lot of information from one another within the stakeholder society. And that's why, as every day went by, the last 2 years, there was something new happening in the world. First in the companies, then the countries. People started getting scared of one another, very simply. So the trust and confidence in the society and also between the countries started diminishing. People started getting afraid. So you have to be very open with your story, direct about your story. We are talking about transparency. You have to be transparent to the reporters, to the society, to your own people. I mean, forget the newspapers and televisions and the people watching them. You have to be open to your people working with you. This is very important. I think we talked about market discipline versus government discipline. Most of us would like to have the market discipline, but I think rather than the regulatory bodies putting the restrictions or disciplines on us, I think we have to start utilizing the values that we have forgotten to utilize in our daily life. At the end, we are all human beings. We all have values. I always hear about regulatory bodies putting the discipline on us. Why not putting the discipline on ourselves. I think the leaders of today should be role models. They should set the expectations, because the new generation, the second, the third tier managers that are coming up in our companies, they are always looking up to the leader, and they are becoming the Xerox copy of what they see in their companies. So I think, for example, I work with 35,000 people, and trust of the people are very important. And media is part of this. So that's why you have to be very correct and open. And at the end of the day, when you go to bed, put your head on the pillow, you have to sleep comfortably. And in order to do that, you have to be first transparent to yourself and to public. Rather than blaming the media, we should also say, I want to say this very clearly. Media is a great vehicle right now for even technical business like banking. Many of the people on the street don't understand banking. And the blame is on bankers now. So I think the bankers should use media to get to the street, to talk to the street. Because this Wall Street versus the Main Street comparison, I think is giving us more difficult times for the head.
So, John, you want to have a rebuttal?
Well, only just to say, I mean, I don't think anybody in the world of business should look for as the media as some kind of culprit to blame. I mean, I thought in the early stages of this, actually the banks got quite an easy ride. And I noticed that change when Mr. Blankfein of Goldman Sachs, not so long ago, made a misfiring joke about, when he was talking about the bonus pool, about Goldman Sachs doing God's work. Now that lit the paper of a major explosion. And I've noticed the papers now after the banks in a very, very big way. And you can't complain about that when that kind of remark, daft remark, I'm sure, and he was trying to be funny, but nonetheless, nobody thought that was funny. None of these 34 million that have been mentioned being unemployed think it's funny, and newspapers have got a job to do, sell their papers, and the television companies and so on. I'd say I'm rather impressed by the financial press. Financial Times are doing a lot around Davos at the moment, but I've found that the series of articles in that, from all kinds of different points of view, as a model of thoughtfulness about what's going on in the system and trying to get people into this kind of mindset that Tim thinks they're already going towards. I wish I could be so confident that they are thinking thoughtfully about the future and how they avoid this kind of situation again.
So we have about 15 minutes left in the session. Let's go to the floor for questions.
Hello, my name is Efrat Peled. I'm the chairman of Harrison Investment, one of the largest investment companies in Israel. I'm also taking part in the Young Global Leader. And the Young Global Leader discussed a lot in the last 2 years, this issue of building the trust again. And we distinguish dramatically between the regulation side and the part of the building the trust, which is more of the emotional, personal emotional part of every person by itself. And as much as we all can say and sit here and say that for 20 years we needed to strengthen the regulation all over the world, we define the personal responsibility as the leading point, I think, in this crisis. Because as Flynn mentioned earlier, there's no certain person or leader that can take the responsibility. It's all of us who were part of this for the last 20 or 30 years, and we all need to fix it all together. And the YGL came with an idea that we've been working for 2 years that is called the Global Business Oath. And we have 2 YGLs here that are familiar in the panel with that. And the Global Business Oath is a personal oath that we encourage each and every one of you to take upon itself if you're a CEO or any other position, because we believe that with 8 points that you're committing basically on a personal level, not at the corporate level, but each and every one of us, and if we as CEOs and leaders will give people the opportunity to pledge to better businesses and doing businesses combined with value, this is where the change is going to come from.
Okay. So what's the question?
No, I just wanted to introduce...
Okay, so do you have a question?
No, it's just...
Sava. Okay. Is there a question from the audience? Any questions from the audience? Yes.
My name is John Neal from Unipond Group. John Monks observed that the head of Goldman Sachs, in all seriousness, told the Sunday Times that he was doing God's work. Now, when I was a small child, I understood that when God was very angry with mankind, he sent fire and brimstone. So now I understand he sends us investment bankers to punish us. So my question is this. Do you think that God is satisfied that investment bankers have done enough to punish us, or do you think more needs to be done?
That may go down as the funniest question of the panel. Certainly up there. Well, Ferit, as you're the banker, you have to cope.
Pass me.
Yeah, just to say, I remember, John, last year when the crisis was raging at its peak at Davos, and I think after he gave a speech about what he thought of investment bankers, you could have put a guillotine outside this conference, and we'd have all sat there knitting as the heads fell off, as the heads were rolling. But I remember that was a powerful moment in the Davos last year.
Ferit, you've had time to stall.
On a serious note, I mean, I take the tone of the question, but I think I want us to go back to the point. We're all in this together. It's not us against the bankers or us against the politicians. It's everybody in the entire system. And there's a lot of emotion. We've talked about it, and there's a lot of pain that has gone through. And no one, I think, can in any way minimize that, nor would I in any shape or form. But I also think that we have to understand the bankers are transforming their business. They are increasing their capital requirements. They're changing their liquidity models. They're changing their compensation structures. They're reassessing their underwriting standards. They're looking at how they go through and assess risk across their organization. And so I think that for us to have confidence where we're going forward, it's not done yet. It's not over. And every part of the system needs to continue to work on that. But we are making progress. And I think if you look back where we are today from a year ago, I think we've made progress, is my point, John.
But what about the bonuses that are being paid by the investment banks this year? Straight just after massive investments from the taxpayer, and there's this largesse being dolloped out in vast amounts, and it's caused the Obama reaction in the way that we saw last week.
My point on this, John, go ahead and I'll finish.
Sorry, but I mean, I paid the bonus this year. Again, I want to confirm again. I paid the bonus, being a non-public company, being the major owner of the company, because I believe my employees did a good job to save the many restructuring of the companies, but they did it without creating any revenue. They did a lot of restructuring of the industrial companies, been in big troubles, because the stupid CFO raised a lot of money without looking what they can really raise again, and with short liquidity, and they bought the assets in other countries without looking how they can cover the debt, and somebody needs to work with them to not go to bankrupt. Why people in a compensation model, which includes a small salary and premium for the end of the year work, unfortunately, this is what exists, and I will pay people who did a good job, despite the fact the company made losses. And this is not a public company. And I believe I did the right thing for the company and for industry.
Did you have public money?
No, again, it's a private company. I mean, it's a private company, but again, I think the issue that we try and forget, investment bankers is the intermediary between the industrials who want to become bigger, who want to raise more money, want to buy more companies, and even saying to cut the banker industry to smaller, needs to understand the deals of the merger and acquisition going billions of dollars cannot happen anymore. Okay, in this case, we need to stop the entire industry's development and saying, okay, the intermediaries need to become smaller, but they can become smaller only if the industry will become smaller also.
So Ruben, let's get some other questions. There's one here somewhere.
Very, very quickly. Yeah. Yes, values, but surely we have to tell the world that business creates jobs and remind them of that. And then reason people are cross is because the banks have gone under but the shareholders haven't suffered, the bondholders haven't suffered. Surely, if we're going to have to rescue banks, which I suspect we will always have to do because they're so interconnected, we need to make it clear who's going to pay, what's going to happen to the CEO, what's going to happen to the non-executive directors, what's going to happen to the shareholders, because nobody understands out there in the real world, I think, why the bailouts happened and everybody else seemed to get away with it and just the taxpayer paid.
Okay, sir.
My name is Henk Rottinghaus from the Netherlands. A question for Mr. Flynn. The discussion is narrowing a bit on technicalities like compensation or banking regulations. But do you really believe that, especially on the Anglo-Saxon side, business understands that you need a social license to operate, and if we don't have that, we can't make money. We need the infrastructure, we need the rules and regulations a society creates, and it gives us also the responsibility and accountability towards that society. That's the message of Mrs. Sarkozy. Not just interesting, Mr. Edelman, but the essence.
Look, I can't speak for the entire business world. I can tell you the people I come across with, the dialogue that's being taken place today. And I think one of the biggest issues we had was a very short-term reward system. Incentives inside organizations, incentives outside of shareholders, very short-term focused, very focused on shareholder return, drove some of the excess that John talked about. And there's no question that the system coming out of this has to have a longer-term point of view, has to look over long-term sustainable rewards, has to look just beyond the shareholders to the broader stakeholders, the communities in which we live and we operate, the employees that have their trust and retirements built into the system. And I'm hopeful and optimistic that coming out of this crisis, a lot of people have learned that. 34 million people lost their jobs. Every one of us in this room probably knows somebody, either family or close friend, who's lost their job, who's lost their house, had some big impact on their retirement plans, all those things coming out of what happened. And I truly believe that those lessons that we've learned will be transformational as we come out of this. And I'm hopeful of that. I see it in organizations that we're involved with. I see it in business leaders that I dialogue with. And I'm confident that that's going to happen. How long will that last? Will it be the rest of my lifetime? When will that cycle come back? You know, we have good news is we have short memories. That's good, also good, and that's also bad news, right? As we kind of work through that system. But you know, that's just one man's point of view, and I respect everybody else's point of view in the room.
Sir.
Andreas Heineke, Dialog in the Dark. I'm a social entrepreneur, and as a social entrepreneur, you are, how to say, a practitioner. And I would like to ask you, can you give me one clear, concrete example how you, amongst your stakeholders, amongst your team, regain trust? One concrete, let's say, leadership program you did, or one concrete campaign you did to regain trust? Just one example, very clear.
Well, I have to come back to what I said earlier. I mean, not all of us have lost trust in the same way. I will put it in that way. And the only thing you can do, I hear what you're saying. A concrete example. In our case, there is well, you can put it. Let me put it that way: either no concrete example or a lot of concrete examples. Because what we try to do is to clearly, very clearly communicate to people what our targets, what our strategy is, what do we want to achieve, and make sure at the same time that we stick to ethical behavior. We have an example. This again, I apologize. The German perspective. We have an instrument, if you will, in Germany in order to reduce or to mitigate unemployment. A special system called short-term work. So the state comes in, pays subsidies to some extent. The companies are suffering. And we clearly said, okay, as long as we can do that, we do not fire people. We pay something and we get a little bit of subsidy from the state. That's what we did, and that's what we communicate. Yes, you might say, well, call this look, you get money from the state. That is true. But for us, it would have been cheaper. To dismiss people, to fire people. We didn't do that. One example. But I do believe, I continue to believe, at the end of the day is what I said, have a transparent, clear communication, and stick to your words, walk the talk. And this is then your general behavior.
We'll try and fit in 2 more questions. Go ahead, please. 1 more question. Okay, I tried.
Alison Smale, I'm the executive editor of the International Herald Tribune. I find it remarkable that none of you have mentioned diversity or changing people as a potential way to regain trust. I hate to make a very obvious point, but there are no women on the podium. I'm not as facile as thinking Lehman Brothers would never have happened as if it was Lehman Sisters. But what have you done to diversify your personnel, which I do think also goes some way towards addressing the sting of social anger that has built up over the treatment of bankers and the perceived treatment of the 34 million unemployed? Thank you.
Well, I'm happy to start with that question. I think diversity is a really critical topic. I think it's in many ways. It's gender diversity, but it's also diversity of experiences and thoughts. And so when you look at diversity across our organization, we very much champion it. I'm proud to say that we have worked very hard to increase the retention of a diverse workforce. We've made great progress in that. I won't give you all the stats, but I think every executive, every individual, every organization, if they're going to be long-term sustainable organizations, they have to have the diversity of experience, the diversity of backgrounds, the diversity of thought, the diversity of gender, all those things that come together to form the right decisions and get to the honest debates that need to take place. So it's a critically important topic, and I think it goes without saying that it's one of the key ingredients to long-term sustainable organizations.
So I'm going to ask each of the panelists for 2 sentences or 3, max. What are you going to do when you go back about rebuilding trust?
Well, I think I dwelled on it today. As I said, be transparent, be clear, and let people know that you would not tolerate unethical behavior, that's, I think, the way we have to act.
Tim?
In my organization, in working with our people, make sure that as we make difficult decisions, we don't rationalize our answers, we don't look for implied permission, we don't do them out of fear, we do them for the right reasons. And I'm going to hopefully be very active in the debate that we had here today. The world is not perfect, we got ways to go, but we're making great progress, and we need to make sure we have the healthy debates of all constituencies to drive forth what needs to be done, a long-term sustainable recovery for all stakeholders.
John?
Well, I don't have much choice with these unemployment figures that have been mentioned and continuing to rise in 2010. We'll be scrambling around trying to keep jobs and trying to generate employment, particularly for young people who are particularly hard hit. But particularly I'll be working at is how do we get the wider needs of the economy to be served by financial services and not for financial services to, in a sense, be running the wider economy in their own interests. I think that's a fundamental point.
Ferit?
Probably one thing I will tell my people, leadership is very important. And a leader should be even a more role model in the company and in the society. And communication is more important than ever now. And what I have heard today is, I think, very important for the core values of a company, sustainability. Sustainability in everything. Because in good times, we hired a lot more people that we could have in our companies. The bad times came, we fired them. I think sustainability is the name of the game. And I'm very happy that in Davos, we are talking about more core values now. I think this means that we are sharing the problems all together. It's not my problem, it's not his problem only. It's everybody's problem. When it's everybody's problem, I think we can solve it.
Ruben?
I don't want to sound arrogant, but I don't need to go to rebuild the trust. I didn't lose the trust. After the crisis, I got much stronger. I believe the trust in our company, the AI. My major point that I'm trying to find a solution, which I don't know how to do it, it's a success measurement system needs to be changed. Until we know the change success measurement system, where is the main success measured by money and only money, we can speak about everything about the person, individual I'm a happy person. I'm glad I have a private company and not the shareholders pushing me to every quarter to show profitability. And I can spend my 25% of my time to NGO. I can do business school. I can do many other things, and my employees understand, and I explain why I'm doing this, and they accept my partners. But that is not so lucky. That's why I say the success measurement system, it will not be changed. We'll face again and again the same problem, because in the end, people say, we like you, Ruben, very much, but wait, how much you made last year? And if you not make it compared to others, you will be fired if you're a CEO. This is why I will say my major issue about rebuilding the trust is the first, coming back to key values, which exist for thousands of years. But the second problem, if the system will not be changed, we'll face the problems again.
Okay, so thanks to the panelists. Just a final thought. I think chief executives need to be private sector diplomats. I think they need to act as well as to communicate better. I think that your question about diversity was very smart, same about sustainability. Business has to figure out its role in society and explain it well. So thanks to all of you for being here on that snowy day. All best.
Well, last year business was very good.